Hello, everyone, and welcome to tonight's event. This is Kevin with Real Traders. And first off, as always, we would like to thank you for spending your Tuesday night with us. Normally we do it on Thursdays, but tonight we're doing it on Tuesday because usually we do it on Thursday. Tonight we have it on Tuesday because we have with us a very special presenter. So tonight we're going to have Stephen W. Bigalow, who possesses over 30 years of investment experience beginning in 1976, including 8 years as a stockbroker with major Wall Street firms. He holds a business and economics degree from Cornell University and is the author of 3 top investing books: Profitable Candlestick Trading, published by John Wiley & Sons in January 2002, and the second edition in 2011. High Profit Candlestick Patterns, released in December 2005, and his latest book, released at the end of 2010, Candlestick Profits: Eliminating Emotions with Candlestick Signals. Steve is an active member of the AAPTA, the American Association of Professional Technical Analysis, and affiliate of the Market Technicians Association. Steve is going to be showing us tonight advanced gap trading strategies. Steve, it's all yours.
All right, thank you, Kevin, and thank you, everybody, for showing up. I hope everybody's having a nice summer night. The first question I usually ask is, how many people have seen my presentations before? Y for yes, N for no. That way I can kind of gauge how fast or slow we want to go. Okay, most everybody. All right. Well, maybe everybody. All right. Good thing we got some new stuff here. Yeah, but there are some no's. All right, I see the no's. Well, just to give everybody a background, I've been doing candlesticks for, I guess, over 35 years. When I started doing candlesticks, nobody was doing candlesticks. And so I had to learn every single one of them just inside and out, because I didn't know which ones really worked and which ones didn't. So the problem with learning something on your own is you don't have anybody out there to give you a second opinion to see whether you're right or not, or whether it's working. I tell people the only time I got a second opinion is I'd go to the doctor and I'd say, "What's wrong with me?" And he'd say, "You're fat." And I say, "Well, I think I want a second opinion." He goes, "All right, you're ugly too." So anyways, when I started out with doing candlesticks, there was about 50 or 60 signals, and I basically, through the years, discovered there was only 12 major signals that you really need to learn. And once you learn those signals, the Japanese rice traders gave us a benefit of also explaining what the psychology of those signals were. So if you know the psychology and you can apply that with gaps, you've got a very not only powerful direction indicator, but usually you're going to pick up the stocks that have very strong price moves. So what we're basically looking for is high profit, high percentage setups. And when you learn the simple logic incorporated into a gap and you apply it after a candlestick signal, it allows you to be prepared for that next big uptrend. So this is how we basically look at our 12 major signals. These are the 12 major signals. And what are we looking for when in any investment program? What are we looking for as far as our trading program? Obviously, we're looking for the setups that allow or show us when the high probability times to be buying and the high probability times to be selling. This was one that we did not too long ago, and I usually preempt this by saying, do we always get 80% gains in our trades? And the answer is definitely not. But the nice thing about candlestick analysis is it puts you in situations where the probabilities of not only being in the right direction, but in the big price moves is extremely high. So the definition of a gap is where there's no price frame or price trading from the previous day's trading. So there's 4 basic gaps in candlesticks. There's a gap up in the overbought condition. There's a gap down in the overbought condition. There's a gap up in the oversold condition and a gap down in the oversold condition. Now, 2 of these are going to show force. That's the gap up in the overbought, or I'm sorry, the oversold condition. That basically tells you there was a change of investor sentiment, and that investor sentiment with the gap up told you that they were definitely interested in getting back into that trade with great enthusiasm. Same scenario on the upside. If you see a candlestick sell signal in the overbought condition, that tells you there's indecision going on. If they gap it down, it tells you there's powerful indecision taking you back down. To show exhaustion. The Japanese rice traders basically have just pure common sense built into the charts. Candlestick signals are just merely the graphic depiction of what's going on in investor sentiment. Where do most people buy? They buy exuberantly at the top. When we see that gap up in the overbought condition, we start looking for a sell signal. Where do most people sell? They panic sell and panic sell at the bottom. If we see a gap down in the oversold condition, we start looking for reversal signals. So anytime I see a potential reversal, when my stochastics are in the oversold area and there's a gap up, it tells me I'm going to be in a strong uptrend. When do I start looking to take profits? When my stochastics are in the overbought condition and they've gapped it up, that's when I'm starting to look for sell signals. Now, my stochastics I've got set at 12.33, and that's not anything set in stone. It's just worked very effectively for me over the last 25, 30 years. So if we see that gap up in the overbought condition, let's say, for example, we understand what the signals are telling us. The Doji, for example. Doji star is a small trading range where they open and close it right at the same level. A long-legged Doji, you have a long trading range, but they close it right about the same level. A dragonfly Doji opens at the top, trades down, close back up at the top. Basically looks like a dragonfly Doji. And the Japanese rice traders explain the gravestone Doji is the warriors coming out of camp, going into battle, and by the end of the day they're beaten back into camp, leaving their dead all over the field, thus the gravestone Doji. A derivative of the Doji is what we call the spinning top, which has a little body but the tails to the upside and the downside. But all of them represent one basic element. There's indecision between the bulls and the bears. Oops, hold on. Scrolled in the wrong direction here. So the Japanese rice traders also gave us some very simple rules. Now remember, the Japanese rice traders that developed candlesticks did not become wealthy. They became legendarily wealthy. They became the financial powerhouse in Japan for centuries. And very simple rules. If you see a Doji at the top, it's time to sell. If you see a Doji at the bottom, you need bullish confirmation to tell you the bulls have taken control. Otherwise, the Japanese rice traders say the weight of the market could continue to push the market down. And anytime you see a Doji, you always pay heed, because that means there's some sort of indecision between the bulls and the bears. But here's the one that makes you a ton of money. The price will usually move, or the trend will usually move in the direction of how they open it the next day after a Doji. Now, I'm using the term day. Candlestick signals work just as effectively on a 1-minute chart, a 5-minute chart, 10-minute chart, as they do on a daily, weekly, or monthly. It's still the accumulative knowledge of everybody buying and selling during a specific time frame. So if I see an uptrend, I'm at the overbought area, and I see a Doji gap up, or I see a gap up and then a Doji, very simple. If they open it lower, they're taking profits. Now, one of the elements that you're looking at in here is I've got some very simple charts. On our charts, we've got the 200, the 50, and the 20, the 20 simple moving averages. And the reason for that is every major money manager around the world uses those moving averages to make decisions about their portfolio. But here's the important one. This is what we call the T-line. The T-line is the 8 exponential moving average. And I think I've got some, I'll go into the T-line here in a minute. But there's that exhaustion where you see the gap up in the overbought condition, start looking for a sell signal. And if you see the price moving up and you're in the overbought condition and they gap it up, notice what they did a spinning top at, right at the 200-day moving average. If they open it lower and start trading it down, that pretty much tells you a story. They're going to fail here at that moving average. So the other side is, if you see, again, the T-line, I guess I should go into it now. Maybe I don't have the other charts. But the T-line is the 8 exponential moving average. And there's a very simple rule using the T-line. If you see a candlestick buy signal and a close above the T-line, you can stay long. as long as you don't see a candlestick sell signal and a close back below the T-line. Or if you, the caveat to that is, the further away you move from the T-line, the higher the probability it's going to come back and test it. So if we're way up in an uptrend and they're gapping it up doing a doji, well in the overbought condition and away from the T-line, if they open it lower, the probabilities are extremely high. That's where the profit taking is going to start coming in. If they gap up and do a doji and gap right back down, that's called an abandoned baby. That's your one-day island reversal. That basically tells you you've got a very strong reversal. So if I see a buy signal and a close above the T-line, when do I sell? And this was always my problem, is I hated to sell because, boy, what if this was the Dell of my lifetime, that I could be rich from this? And I sold it out, and it took off without me. Boy, would I look stupid. Well, now I know that if I see a sell signal and confirmed, I'm going to take my profits, especially if I see a gap up in the overbought condition. Worst case scenario is I can always buy if it doesn't, it shows what we call a J-hook pattern at the T-line, which we'll get into a little bit later. On the other hand, if we say that signal at the top followed by a gap down, that tells me that's where the buyers and sellers reach indecision, and when they gap it down, it tells you there's a very strong decision to get out of that trade. And notice that what kept you into this trade this whole way up. They couldn't really close this below the T-line. When they gap it down, that means there's been a drastic change of investor sentiment. Let's see. Just seeing if... Okay. I guess I should have said, if you've got any questions, feel free to ask them. I'll try to answer them as we go along. And if I skip it, don't worry, I'll stay as long as people have questions tonight. All right, so if we, the other side of it is we see a gap down in the oversold condition, start looking for a buy signal. Or if we see a potential reversal signal, look for that reversal. Look for that. Now, if we see a buy signal and a gap up, that means that reversal has occurred and it's going to move very strong. So anytime I see dojis in the oversold area and they gap it up, especially if they gap it up and close above the T-line, this is what we call your best friend, because you can make a living just on a doji gap up, because that's usually going to be a precursor to very strong price moves. And again, there's that doji gap up, very strong price move. This is what we call a left-right combo, where you see a doji followed by a bullish engulfing signal. A doji is kind of that little left jab. The bullish engulfing signal is that roundhouse hook. And then they gap it up above the T-line. You just stay long until you see a sell signal and a close back below the T-line. Anytime you see a series of dojis, if one doji means indecision, a series of dojis means greater indecision. And they gap it up and close above the T-line, that tells you what they've done coming out of that indecision area. So if you see dojis and they start gapping it up, this also is a very strong signal. This is called a doji sandwich. Notice how we have a big bullish day, a doji, and then they gap it up and have another big bullish day. That's a doji sandwich. There's the bread, there's the doji, there's the other bread. It's usually going to be followed by more upside. And do we always get big moves like this? It's just the probabilities that if you see a doji followed by a gap up in the oversold area, I'm buying immediately. We don't necessarily expect this. All we expect is an uptrend. But as I said before, the nice thing about candlestick analysis is if you see the change of investor sentiment and a gap up, the probabilities of being in a very strong price move is huge. All right. There are the questions over here. I'm sorry. And say that the T-line is the 8 exponential moving average. And what is your time frame? Right now we're looking at daily charts. These are daily charts. They could be 1-minute charts. They could be 10-minute charts. They're all going to look exactly the same. And let's see. So again, that series of dojis, a little gap up, bullish confirmation. This is just your most, and the reason we call this the best friend is not only does it work extremely strong, but the frequency of seeing this type of trade is very, very big. Dojis, gap ups. Left-right combo, gap up. Just puts you in a position of being in the right place at the right time. Again, the doji, gap up, or left-right combo, reversal signal, followed by a gap up. So anytime I see this type of setup where they've gapped it down, especially in the oversold area, and gap it right back up above the T-line, I'm buying immediately. Now, this also makes for very simple stop losses. In the last 35, 40 years that I've been in the business of investing, I've heard every major money manager or every money manager consultant tell you to cut your losses short and let your profits run. The only problem is I've never heard a single one tell you how you cut your losses short and let your profits run. The Japanese rice traders have very simple rules. If this is going to be a doji with a positive open, it should be going this way. Where should it not be going? Back below the doji. If it does, you close out the position right away. If you can see that it's doing it right at a major support level, in this case our T-line, you see a doji right on the T-line and they gap it up, that tells us our next kind of our slow curve confirmation, we're starting to break out into new territory. The bullish engulfing signal obviously is where they open it below the previous day's close and they close it above the previous day's open. This white body completely engulfs this black body and it just acts like a neon sign, so we're starting to look for buy signals or buy confirmation, and the confirmation of that is a gap up, which tells us they're now very anxious to get back into this trend. And it doesn't have to be a big gap up. If we see a candlestick buy signal in the oversold condition, closing above the T-line, very simple, common sense. What do we want to see the next day? We want to see the bulls are still there. If they are, we're buying immediately. In this case, if this was the candle that told us that the bulls are taking control with a bullish signal, a bullish engulfing signal, and we call this a booster's bullish engulfing with the booster tail right below it. Very simple. If we start buying, where should this not close? The Japanese rice trader make it very simple, common sense. If this is the candle that told us the bulls were in control, they shouldn't close it more than halfway down this candle or the bears are still in control. The hammer signal. There's only one formula that you need to know in candlesticks, and that's the number 2. In this case, the tail is 2 times greater than the body on a hammer. And then if they gap it up and start going positive, that tells you you've got a definite confirmation of that signal. The tails kind of give you the inclination. If they've gapped this price down and did a hammer in the oversold area, we start looking for buy signals or buy confirmation. Hammer, gap up. So that, everybody says, where do you grab for the fallen knife? Well, if we see a gap down in the oversold area, we start looking for the buy signal, confirming those signals the next day. And again, if they gap it down and then gap it right back up, there's your one-day island reversal or your abandoned baby, just a very, very strong reversal signal. Here's the hanging man. A hanging man works extremely well if the next day you see bearish confirmation. It's even more compelling if you see a gap down the next day, telling you that the bears have now definitely taken control. The piercing signal, same scenario. Closes more than halfway up, opens below any of the previous day's trading, which means it gaps down and closes above the halfway point of this candle. Tells us that and they gap it up the next day, tells us the bears or the bulls have taken control. Let's say piercing signal, gap up, a definite change of investor sentiment. The opposite of the piercing signal is the dark cloud signal. Dark cloud is very simple to see. It opens above anywhere above the previous day's trading, not just the body, but the trading, and closes more than halfway down this candle. If we see that dark cloud and a gap down, it tells us not only have there's been a change of investor sentiment, they're trying to get out of this with great enthusiasm. Let's see. No audio is coming through. How long has that been going on? Okay, all right, okay. Yeah, I just have a hard time reading the darn. Okay, let's do it this way. If you have questions, I'll try to catch them at the end when I can read them and talk at the same time. Somewhat like chewing gum and talking at the same time. An evening star signal with a shooting star, pretty good indication when they trade lower that's heading down, but better indication if they gap it down that you're going to have a strong downtrend. Shooting star followed by a gap down tells you there's been a definite decision to go south on this trade. The inverted hammer signal is kind of the reverse psychology of investing. The bears are happy, the bears are happy, the bears are happy. Then all of a sudden the bulls step in and the bears are nervous. But by the end of the day, they traded back down to the lower end of the trading range, and all the bears say, shoot, that was a close one. The next day they open a positive, the bears say, shoot, the bulls are still here, get me out of the way, and that starts your uptrend. Now, just kind of a side light here. If you see an inverted hammer in the oversold area and it opens positive, even though the inverted hammer doesn't occur as often as some of the other major signals, the probabilities of it going positive is probably 95% or greater. And that's nothing official other than just my observations over the last 30 or 40 years, that this, when you see an inverted hammer and a positive open, you're going to be in an uptrend. The other side of that is, if that's the case, makes it very simple. If this opens positive, there's a very strong probability we're going up, which means there's only one place this should not go once you buy it, and that's back down below this level. If it does, you close out the position immediately. There's that ultimate inverted hammer, which is the gravestone doji, and then they gap it up the next day. Look for a very strong price move. The more gaps you see after a buy signal, the stronger this move will probably be. Inverted hammer, gap up. Inverted hammer, gap up. Just very, and again, this is not rocket science. I tell people, all you have to do is be able to see, and you can analyze candlesticks. It's like the old couple getting ready for bed, and she's standing in front of the mirror, and she says, look at me. My face is wrinkly, my arms are skinny, my butt is scrawny, my legs are spindly. She turns around to her husband and says, is there anything positive you could say about my body that would make me feel good? He goes, well, your eyesight's still pretty good. So as long as you can see, you can analyze candlesticks. And a bullish harami is, in the Western terminology, is the inside day. Bullish harami is, in Japanese, means pregnant woman. There's her body, and there's her little belly sticking out. If it opens positive the next day, they're telling you that the selling has stopped and the reversal has occurred. Or if we see a bullish harami and they gap it up the next day, basically tells us the selling has stopped and the buying is coming back with great enthusiasm. If you see that gap up after a signal, tells you there's been a dramatic change of investor sentiment after the selling has stopped. Just any time I see a bullish harami and a gap up, I'm buying immediately. Just tells you the probabilities are pretty strong you're going to be in an uptrend. And if you see this occur, we have a term we call convergence, which is putting all the elements of a reversal in sight. If we have a bullish harami selling and stop, followed by a gap up in the oversold area, closing above the T line, and we can see it's doing it right off the 50-day moving average, the more elements that we can see that would tell us this is the time that we should be buying, the stronger the probabilities we're going to be in an uptrend. The bearish harami sells off if you start seeing selling, but is more likely to sell off hard if you see that bearish harami doji gap down. So anytime you see that bearish harami followed by a gap down, you want to be shorting immediately. Just tells you that they've changed their mind, they've stopped the buying, the sellers are coming in with good strength. The morning star signal is a 3-day pattern. Down day, day of indecision, a bullish candle that takes you up more than halfway up this candle. Again, that number 2, if the gap up is on this side, it's going to be a very strong price move. And if it closes above the T line, that much more probability you're going to be in a strong uptrend. Now here's the strongest of all the kicker, or strongest of all the kicker signals. Stronger of all the candlestick signals, the kicker signal. Very simple. If you're in a downtrend and they open it here and close it here. The next day they gap it up at or above the previous day's open and go positive. That tells you the investor sentiment has been kicked in the other direction. On the other hand, if you're in an uptrend and they open it here and close it up here, if they open it the next day, if you're in an uptrend, this is the last place it should be opening, below the previous day's candle. There's only one thing you want to do. Usually when I saw this happen, I would say, please, 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 just take it up one more time and let me out. But if it gaps down below the previous day's open, there's only one thing you do. Close the position immediately, because the bears are now in control. So anytime I see this little kicker signal, not only is it going to be an uptrend, but it's usually going to be a very strong uptrend. And if they close it above the T line, same scenario, very strong uptrend. The bigger this little gap up is, the higher the probability they're going to take it higher. Again, a kicker signal closing above the T line. Now this is what we call flutter kicker signal. Notice they opened it here, closed it here. Then they gap it up above the previous day's open, but they do a doji. And what do we know about the simple rule of a doji? It's going to move in the direction of how they open it after a doji. So they open it positive and start trading positive. That tells us we want to be buying immediately, because this is going to create a flutter kicker signal, which is essentially, if you took this little flutter out of here, you've got a kicker signal, which is the strongest of all the candlestick signals. If you see them gap down, it's time to go short. A kicker signal just tells you there's been a drastic change of investor sentiment. We recommended this at one time because we had a kicker signal that took us right back up above the T line, told us it was going to be very strong up move from there. So gaps represent enthusiasm to get into a position where the prices have where they're not even traded in the previous day's trading range. It tells you there's been a dramatic change of investor force. So again, this is giving us high percentage probabilities, even with patterns. If we see a big pattern like a fry pan bottom and they gap it up at the same point they started the pattern, that tells you that's the enthusiasm that we're looking for to start the breakout. Same thing with a dumpling top, the bearish pattern. Big rounding top, and then you have a doji gap down. That tells you you're going to have a slingshot effect to the downside. So anytime I see this setting up and they start gapping it down, I'm going short, because now I'm probably on the wave 1, wave 2, wave 3 to the downside. So the nice thing about the candlestick signals is using some of the confirming indicators, easy to spot support and resistance. This is our NASDAQ. If we can identify dojis at the bottom and they start gapping it up, it tells us we're going to be in an uptrend. If they pull it back, when do they reverse it? When we start seeing dojis and gap ups again, back up above the T line. This makes identifying patterns very easy, and getting into patterns or price moves very easy. This is what we call the classic. We know a fry pan bottom breakout is going to produce a very strong price move. We also know that after a very strong price move, we've got the potential of a J-hook pattern, which is a strong price move, followed back by indecision trading, dojis, hammers, dojis, and then a left-right combo. Then they gap it up, and where did they gap it up? Through the top of the previous trend. This tells us wave 3 is going to probably be the same magnitude as wave 1. Now these aren't anything different than observing what human nature has done, not for decades, but for centuries. This is what the Japanese rice traders have told us, or shown us, what usually goes on in investor sentiment. We recommended IMPV a couple weeks ago, because notice what we had here. We had kind of a flutter kicker. Then we had a pullback. Today we re-recommended it because it gapped up, starting to move prices higher. We also recommended BXE because notice our flutter kicker, and it gapped up today. Stochastic's just coming up. It's hit the resistance levels, but more than likely, with the force of this signal, we've still got a lot more upside. We also bought JRJC yesterday when we saw the fry pan bottom and the gap up. Did we have any idea that it was going up? We bought the calls down here at 55 cents. We had some people selling the calls at 245 at the end of the day, and other people selling calls today at 380 and higher. again, it boils down to we don't know what price moves are going to happen of this magnitude. We just know that we're putting ourselves in situations where investor sentiment is building up to where the prospects of being in good trades are highly in our favor. So with that, that's about all I got on candlesticks and gaps. Now, I think Pat has put out a special. Ooh, Kevin, do you have the link for the special? Okay. Okay, great. Yeah, all we're doing is we're just, I think these are like $69 a piece. I think she's got both of them for $59, and there's some other little specials. So you want to look at them because basically it boils down to a lot of people are afraid to buy gaps because most money managers say stay away from gaps. You don't know what's going on in the price when they're gapping it around. With candlestick signals, if you know what the psychology was of the reversal, and then there's a gap, they're your best friend. You can make a very strong living just trading off candlestick signals and gaps. Okay, let me see if I can see some of the questions here. Let's see, audio, okay. Can you show current market that has one of these candlesticks formed or forming? I don't have it because the market is already in a trend. This is another nice thing about candlestick analysis. Not only can you analyze individual stocks, but again, if you go back to the basic statement that candlestick signals are the accumulative knowledge of everybody buying and selling during a particular time frame, you can basically analyze what the market's doing. So if you can see that the market's going up, you can see which sectors are the strongest, and you can analyze which stocks in those sectors are the strongest. You're basically putting all the stars in alignment. So let's see, what else we got? Can Bollinger Bands be used in replacement of the A8? No. We've had John talking on our site a couple of times, but he'll even admit that the Bollinger Bands don't tell you when to get in or out. It just tells you how far away you're out of the trend. Again, I tell people, don't take my word for it. Put the 8 exponential moving average on your charts and just see if they work. I mean, this isn't rocket science. This is just using common sense. Basically, what it boils down to is candlestick signals are the graphic depiction of what's going on in human nature. Most moving averages, like the 200, the 50, and the 20, act as magnets because everybody's watching them. So that's where you're going to see most of the decision-making going on at those levels. And with candlestick signals, we can essentially see what the investor sentiment is at those technical levels. The other side of the coin is nobody uses the 8 exponential moving average. So when it works effectively, it basically tells you it's acting like a Fibonacci number, where it's kind of a natural point where investor sentiment works. So I just say try it. If it doesn't work, you take it back off. But I used to make good money before the T-line came along. I've dramatically improved my trading results using the T-line. Let's see. Can you show the frame with all 12 signals and patterns? I don't know. Excuse me. Let me do this. And show. I'll get there. All right. There you go. Did I miss the time to say? Yeah, let's see. Did you create? No. The creator of I do private training sessions. As a matter of fact, right now I'm on Cuca Lake in Central New York. We've just had a couple private training sessions, but one of my first students, Rick Sadler, came out of Anchorage, Alaska, came down and did a private training session, loved candlesticks, but just wasn't getting the full grip on it. And about 2 months later, he called me and said, hey, take a look at the T-line, or the 8 exponential. We didn't call it the T-line at that time. And I put it on, and it works excellent. So the nice thing about our chat room is that you don't have to reinvent the wheel. Every time somebody comes up with something that improves the probabilities of being in the right trade at the right time, they add that information into the chat room. Do you have a course or a trade room or learning? Yes, my if you go to the special, that will give you all that information. Do you trade the same stocks over and again, or buy and sell candlestick signals? You can do it either way. If you're trading a set universe of stocks, a lot of people just trade Amazon, Apple, Netflix, Facebook. Then the way I do it is I'm looking for the best possible signals using very simple scanning techniques. In less than 20 minutes each afternoon, I can analyze 8,500 stocks and narrow it down to the best 1 or 2 trades for the next day, including commodities. Let's see if I'm going in the right direction here. I think they're going to be sending out a link on this tomorrow. Let's see. I'm trying to read this fine print. Is the T-line equivalent to any of the common moving averages? Oh, it's pretty close to the 10 simple moving average, but I guess it's common to the 8 exponential moving average. How's that? All right. I guess that's about it. Basically, I tell people you don't have to overanalyze candlesticks. I always end with the story of the lady that brings in her parakeet to the vet, puts it down on his table and said, "Can you fix my my parakeet? He's been my best friend for the last 8 years." The vet goes, "Ma'am, I think your parakeet's dead." She goes, "Oh no, isn't there something? He's been my best friend." He goes, "All right." So he goes out to the back of his clinic, brings in a cat, lays the cat next to the parakeet. The cat sniffs the parakeet, kind of looks up at him and shakes his head. Says, I'm sorry, but I think your parakeet's dead." She goes, "Oh no, are you sure? Isn't there something just to make sure?" And he goes, "All right." Goes out to the back of his clinic, brings in this great big Labrador retriever, comes bounding in, puts his paws up on the table, sniffs the bird, looks up at the vet, kind of shakes his head, and said, "Ma'am, I think your parakeet's dead." She goes, "Oh man." They go out to the front desk, and he goes, "Well, that'll be $250. She says, "You're charging me $250 just to tell me my parakeet's dead?" And he goes, "No, ma'am, I would have done that for $18. Then he wanted a CAT scan and a lab report after that. So I tell people you don't have to overanalyze candlesticks. It's just the common sense investment perceptions put into a graphic depiction. So, all right. With that, thank you, Kevin. Thank you, everybody.
Thank you, Steve. Thank you so much for coming in.
Hopefully.
Thank you so much for coming in, and always love the joke, Steve. Guys,
Okay.
I just want to mention again, because I didn't mention it on the mic. If you want to check out Steve's offer, go over to realtraderswebinar.com/candlestick. It's really easy to remember, realtraderswebinar.com/candlestick. This was recorded. I know a lot of people have asked for it. We will be sending it out tomorrow. And just so you know, the offer that Steve's offering is for $59. You can get 2 of his products, or for $97 you can get his gap combo training. Plus, you get a 30-day free trial to the Candlestick Forum and a bunch of bonuses, like $300 plus worth of bonuses. So definitely something you want to check out. As always, thank you for spending your Tuesday night with us.
Yeah, Kevin, let me tell everybody what's on the website. We've got a chat room that's open every single day. We've got about 200, 250 people in there every day at all certain levels or all specific levels of learning candlesticks. Monday nights, I do a special session for members where we go through what the market's doing, what some of the commodities and currencies are doing, and if they're affecting the market, and then which stocks and which signals seem to be working the best. We do that for everybody. That's free on Wednesday or on Thursday night. I put out 2 or 3 stock picks every day, not so people have stock picks to trade, but so they can look at the video and see why those picks were made. So they've got a constant learning process. So also during the month, we do, you can buy the videos, training videos for all sorts of things, but we do most of them for free for the members. We may have a session in one evening where we're showing how to do the entry and exit strategies to optimize your profits, or how to set up stop losses effectively with candlesticks, or how to scan for the best possible trade. So usually each month in the normal fee, you're getting about $200 or $300 worth of extra training for free with that. So there's lots of things on the website. I think we've got like 1,300 pages on the website right now that people can use effectively for learning how to use candlesticks. So thank you, Kevin.
Okay, great. Thank you so much, Steve. Thank you for taking the time to come share with the community tonight. Always a pleasure. And guys, Omar, again, that website link was realtraderswebinar.com/candlestick. You could see it in the chat area if you just click it there, or if not, you could just type it in, realtraderswebinar.com/candlestick. Guys, thank you so much for being here tonight. Steven, thank you for spending the time and sharing with the community. And we'll be sending out the replay tomorrow, guys. Have a great night.
All right, thank you. Good night, everybody.